think the tone will be security over growth. That's been the consistent tone. I think there's so much uncertainty going on the other side of the bilateral relationship right now that it's really hard to formulate a strong view on what things might look like in 6 or 12 months. And Xi Jinping himself is dealing with this uncertainty in trying to set a strategic course for China when we don't really know what the strategic approach in the U.S. is going to look like. I know people tend to say Biden and Trump have similar policies. I don't really buy that. We'll see what President Trump brings should he return to office. There's a tremendous amount of uncertainty there. His new vice presidential nominee, J.D. Vance, is aggressively hawkish on China. Some of the candidates for the Treasury Secretary job are aggressively hawkish on China. Some, like a Jamie Dimon, maybe not so much. So, should Trump get reelected, we'll get a lot of information when he makes that Treasury pick. We're not entirely sure who the Democratic candidate is or what the policies would look like should the other side win. So there's just a ton of uncertainty that China is dealing with. And again, I think the focus from Xi's perspective will be simply to make China as robust as possible to whatever might come at it in terms of the bilateral relationship, tariffs from Europe, or other moves that anyone might make to decouple China.
Brian, speaking of uncertainty, something that Chinese people are talking a lot about right now, and I don't know if you're a basketball fan, I can't quite see whether you are one based on your shelf behind you there, but garbage time. This seems to be a catchphrase that a lot of Chinese people are talking about right now, and the propaganda machine is trying very hard to rebut at the moment. But what it's insinuating is highlighting the pessimism in the economy right now. How are you watching that?
Well, yeah, the Chinese economy is on the wrong side of a blowout loss, but it's only the second quarter, so there's going to be a lot of garbage time. Some quick numbers for you. The property sales are half of what they were on a flow basis relative to 2021. But property under construction is a function of 5 years of cumulative property sales because it takes a long time to get these things started, finished, and if they ever get completed, actually deliver them. So sales are down by half. Construction activity, as officially measured, is only 15% off the highs. That, too, is going to fall to half of what it was over the next 3 or 4 years. So you've really only started to see the beginning of the loss in economic activity and momentum coming from the property sector. It's going to get a lot worse in the next couple of years.
And that's quite a contrarian view, because what we were hearing was that property has hit rock bottom. The damage to the property sector has hit rock bottom. That is bottomed out, and things may not recover swiftly from here, but would labor around these levels.
From a sales perspective, you're still down double-digit rates, but that is decelerating. Yes, sure. So sales years ago were falling 25%. Now they're falling 15%. I think that sales could level out in the next year or so. The problem is that pipeline of sales is still making its way through the construction activity, the sales that they had in 2020, 21, and 22 that were very strong. So as those units, assuming they ever get completed, if they can finance the completion of those units, there's no new sales to replace that. So the level of activity is going to, in terms of actual shovels being put in the ground on a day-to-day basis, is going to continue to decline for 2 or 3 years, quite steeply from here.